For those of you who have been at meetings over the years, you know that Dr. Goodman is a straight shooter and really has given us over the years a very unblemished and realistic view of both the economic and political realities, because Lord knows in most places around the world, and certainly, especially in the United States, politics and economics are inextricably linked. So, after meeting Bob and getting to know him and listening to him, when you're listening to Joe Connolly on WCBS in the morning and he's giving you this tripe about, I was at a cocktail party the other day and I heard this economist say, it's all very superficial, I find it so, and very patronizing. But I think for those of you who know Dr. Goodman, you're going to be in for some real insight and a real good talk. For those of you who are just hearing him for the first time, you can have your money back if you're completely, if you're not completely satisfied. So anyway, without further ado, I would like to introduce Dr. Robert Goodman.
Thank you very much. I'm not going to keep you very long at all. There's something happening tonight that I think you'd all like to get to see. I can tell you the action won't start till about 9:30, 10 o'clock, but you'll be out long before that. I have been coming here, I guess it's 6 or 7 years now. Some of you have become friends. Others, I hope, become friends of mine. I do try and tell you what I think. I don't try and predict anything because I know as a professional economist, economists are not trained to predict anything. We're trained to explain a situation. If I can explain to you what the most probable environment will look like in which you're going to operate, you will know how to deal with that in your business. And that's what I try and do, to give you a plan, an outline of what you're going to experience over the short, intermediate, and the longer term. It is very important to understand that the economic environment in which we are operating does not happen in a vacuum. It is shaped by economic policies. Economic policies are the levers by which the government steers this incredible ship. And I mean, this is a big ship. The size of our economy is $19 trillion. That number is mind-numbing. Even real estate people can't relate to a number like 19 trillion. It's a huge ship. You cannot turn it immediately. It takes several years before policies begin to have an effect. And before you can get these policies put in place, given a democracy, we have to have a debate and compromise. And I want to give you an idea of how this works. Everybody talks about the Reagan years and how wonderful that was. And I will tell you, for many people, it was a terrific period of time when the economy that was mired in an inflation rate that was upwards of 12%, when mortgage rates were 17% and treasury bonds were 15% and cash was 20% in a cash fund. What our government did, because things had gotten so bad, and that's what causes our government to react. When things get so bad, they have no choice. What our government did was enact a set of policies, ultimately, which were appropriate for the problems that we faced at the time. And what made it so dramatic was these policies were different. We had never done anything like it before. Who would think that in a government like ours, we gave the richest people in this country, and corporations, and investors, and producers, the largest tax cut in American history? You couldn't have predicted that, but it occurred. And the rest became history. But I want you to know that when Reagan came into office in January of 1981, there was a 17-month debate. It took 17 months where the economy was in a recession, where unemployment rate was reaching 10.7%, inflation and interest rates were raging to levels we had never seen before. This debate went on. But in May of 1982, 17 months later, the government acted. And people were stunned. Who would have ever believed our government would do such a thing given the politics? But they did it because they had no choice. It took the equity market 3 or 4 months before it reacted, and when it did, you couldn't stop it. It went from 777 to 1,000, and we thought that was a magic ceiling at that point, because we'd been there 17 different times in the last 15 years. But it went to 1,000 like a knife through butter because the nature of the system had changed. What we had done is we unleashed the strongest, the most powerful economic machine this world had ever seen. We let the markets work. And boy, did they work. An 8.5-year economic recovery, inflation at 12% was dropping very quickly. In 8 or 9 years, it was down to 3%. Those interest rates of 12% and 15% in 2 years were cut in half. People went back to work. We had strong growth. Corporate earnings grew very rapidly. And the markets, as you know, in about 5 years went to 2,722. And that wasn't the end. We had ups and downs, yes, but it kept going. But it is so important to understand that if you rely on markets to work, if you adopt the policies that free marketeers espouse, you're going to get something else. And in a democracy, it is an unintended consequence, and I'm telling you, you have to understand this. During this period, the gap between the producers and those producing less, I don't like the word rich and poor, but the gap between people of different productive capabilities got bigger and bigger and bigger until it became socially intolerant. I said socially because there are two terms we use interchangeably, and I want you to listen for these things in the debate. There is social justice and there is economic justice. There is social fairness and there's economic fairness, and they're different, yet they're used interchangeably. Economic fairness, to an economist, means if you produce $100 an hour of output, you should and will ultimately in a free market receive $100 of compensation. One way or another, the system literally gives you back what you produced. If for whatever reason, and there are plenty, that you can only produce $8 an hour, this system, if freely operating, will give you $8 of purchasing power, one way or another. It is a blind system. You think justice is blind? Our economy is blind. It doesn't give you black or white, green, pink, man, woman. It doesn't care. It sees your contribution to the system. And if the markets value what you do highly, you will get compensated. And sometimes it seems very strange. I told you about economic fairness. Think about it for a second. A-Rod, the baseball player, earns at least 5 times more than the best neurosurgeon in the United States. Now, you're going to call that socially fair or socially gay? It makes no sense. But to an economist, it makes all the sense in the world. So be very careful what you advocate. You want to free up this system? You want economic growth? You want to surpass your wildest imaginings? Free up this system. But be prepared for something else. The gap will get bigger, bigger, and bigger. That causes social unrest. The people that don't understand it. And they react. And you know how they react? They react by voting. And when the majority of the American people feel that they're being set upon, that this is unfair, that the rich are somehow taking something they've rightfully owned from them, they will vote to change that system. And it will slow down economic growth. And for a short period of time, it will look as if you've made it more fair. Because now you'll be earning $15 an hour instead of 8. How could you argue that that didn't make those people better off? But this system is very interesting. Ultimately, the system will one way or the other see that that gap goes back to where it belongs economically. And all of a sudden, $15 an hour won't be enough. They'll need $20 an hour, and 30 and 40. And the system over time goes up and down. Let me bring this up to today, because it's very important. We face the most dangerous situation this country has ever faced economically since the 1930s. This is not the 1970s and early 80s. This is in every economic textbook. The kids who take Econ 101 read about this all the time. If you want good news tonight, I will tell you this: the solution to our malaise, the solution to our economic problems is known. It's been known and tried and proven. Back in the 1930s, after a very long recovery, our government made some mistakes. The Federal Reserve Board, in an economic slowdown, reacted improperly. Every student knows this. What they did to attract capital back into the United States, they raised interest rates into an economic slowdown. And that slowdown got worse and worse, and we fell into a recession. And then as people lost their jobs, the government, with the best of intentions, and remember, our government acts with the best of intentions, to protect American workers, we levied the Smoot-Hawley tariff in 1930, June. We put a 50% tariff across the board on all these imports that were keeping Americans from working. And what we didn't count on, the unintended consequence, is that our partners, our trading partners, they retaliated. So we want to protect steel. They levied a tariff on our egg producers. And what happened was, inadvertently, world trade collapsed. And we went into a depression. And I want you to think about this. When Roosevelt came in, this is not political, it's a fact. He was no economist. John Maynard Keynes hadn't written his book. He had 4 more years before he wrote the book. What Roosevelt said, it's so instructive. He said, if we don't want a revolution, to avoid a real French-style revolution, we have to give Americans paychecks. We have 25% people out of work. And so, because they had no choice, desperation caused them to set up the WPA and the CCC and the TVA. And what they basically said was, hey, we got to pay a guy to dig a hole. Let's pay his friend to fill it up. They'll have money, which they will spend, which will be income to someone else who will spend that. We will prime the pump and the economy will be revived. It was a demand management solution to a demand problem. Consumers weren't spending. Businesses weren't spending. Exports were collapsing. The only thing available to the government, to the American people, was to have the government get into the market and spend it for them. And that's what they did. To do it, they borrowed money. But they borrowed very cheaply because interest rates had collapsed. Now, if things sound familiar, I'm doing that for a reason. Interest rates on a 30-year treasury were 1.2%. So the government was literally borrowing free money from the rest of the world, who was glad to give it to us because they were scared to death. And we spent it on things that we knew would have a return in the future. Think about it. Who in this room wouldn't borrow money at 2.7% if you could invest it? At 8%, 7%, 5%. You'd do it all day long. And the economy responded in 32. It took off. You know, between 32 and 36, we had the strongest growth this economy has ever seen. 8.5% per year in real terms. It was spectacular. And the markets, the equity market, responded like you'd predict. It had dropped 90% from 29 to 32. From 400 on the Dow to 44, 80%, 90%. It was huge. Between 32 and 36, responding to the revival of this incredible economic machine, the market had gotten back to 400. I can tell you in 1932, you wouldn't have given a plug nickel for an American stock, for an American company. But that's what happens. The market reflects the health of the system. What happened in 1937 is very, very instructive. I urge you, read about it. It's easy. In 1937, before the economy had reached liftoff, we were going, but we weren't where we had to be self-sustaining. Something else caught our eye. All this borrowing had raised our debt level. We were running big deficits. And the government too soon said, oh my God, all this debt. So they reacted to the debt and the deficit. They cut back on those government spending programs. They raised taxes too soon. And the economy fell right back into a depression that we didn't get out of until World War II because of the demand created by that conflict. That gives you the history. Now look at what we're doing today. The debt that we run. You go to a cocktail party, somebody's going to come to you and say, my God, we owe $19 trillion. Debt is 100% of GDP. Our deficit's of $500 billion a year. We've doubled the debt in the last 8 years. You're worrying about the wrong thing. We can do something no one else in the world can do. Not Brazil, not Germany, not France, not Canada, only the United States. You ever wonder why when people get scared overseas, a terrorist attack or a collapse of an economy or the Greece problem, when people get scared, where do they go with the money? Here. Why do you think after 7 years our long-term treasury yield is 2.7%? Our enemies buy our securities for only one reason. They know that we have the ability to pay them back even if we have to print the money. We've got the world where we want them. We can borrow now for 30 years free. But we won't do it. It's like starting a marathon, and before you start, you voluntarily tie your arm to your leg. We're holding ourselves back. It's incredible what we are doing. And we know the problem. It isn't a supply problem that lets the supply side policies back in the 80s anymore. This is a demand problem. Consumers, if they spend 1 month, they cut back the next because their incomes aren't growing, their wealth is a little stagnant, they're worried about their jobs. So the consumer isn't spending. Businesses, they have $2 trillion on their balance sheet. There's cash there. They're not investing it because no corporation will build a plant that'll come on stream in 3 years if the outlook is such that they're not sure the demand will be there for the product produced by that plant. So what do they do with the cash? They'll buy back their stock with it. They'll pay increased dividends. They'll buy out a competitor, but they don't spend it. Exports, flat. Right now, the only thing we can do is what we did in the 30s. We need the government to borrow those cheap funds from people that are begging us to borrow it from them. And use it to put the people to work. And in the short run, will it increase our deficit? Absolutely. And will it increase the debt ratio in this country? Absolutely. But I don't have to tell you, if people go back to work, they pay taxes, you must have a longer-term program that assures that over the longer run, the private sector grows faster than the government. You reestablish equilibrium, and you let this system do what it does best, which is produce efficiently. The markets will take care of themselves. Will interest rates go up under those conditions? Absolutely. Because when there's a growing economy, there's a demand for credit, interest rates tend to rise. Interest rates rising does not preclude a rising stock market. Don't make that mistake. It depends on why interest rates are going up or down. If interest rates go down the way they did in the 30s, the way that they have now, it is perfectly consistent with the stock market literally collapsing on you. Because declining interest rates reflect the lack of demand for credit. And if rates are rising in a healthy economy, people focus away from interest rates are rising because of a rapidly growing economy. Focus goes away from those interest rates towards earnings, which will also be growing rapidly. Confidence comes back, multiples rise, compounding rising earnings, and voila, you've got a bull market again. The problem that nobody will tell you, including Janet Yellen at the Fed, and this is very important for you folks to know, the Fed is impotent. They've run out of bullets. Who would have thought in this room 10 years ago if we said, interest rates on a 30-year mortgage are going to be 3.8%, you'd think they'd be building houses on top of houses. The nature of the system has changed now. Don't measure your performance in your business now by what happened 5 years ago or 10 years ago. We are in a totally different environment. Our economy is stuck. We are literally mired in a below-average recovery that could last some more, but in this below-average recovery where the only reason the unemployment rate is so low, it's not because things are good, it's because people have dropped out of the labor force. You know what it's like? What a great analogy. It's like having a steak on a plate, and I shrink the plate and tell you you're getting more steak. That's what this is all about. The numbers aren't giving you a real feel for what's going on. So the Fed is stuck. They cannot lower interest rates low enough to get people to borrow and spend. It's as simple as that. Same problem we faced in the 30s. It's called a liquidity trap. It's when the Fed literally has run out of gas. They've tried everything, QE 1, 2, 3. They could go back to 4 and 5. It's all over the world. Negative interest rates, have you ever? To pay somebody to hold your money? Even negative rates aren't getting things to go. Austerity is the name of the game now because they're focused on the debt. The only thing we have now left as a policy tool is fiscal stimulus. The same thing we did in the 30s. Yes, we have to borrow this money, and thank goodness we can. And we've got to put our people to work doing the things that people now just give lip service to. I'm talking about infrastructure, building things, giving people paychecks. All of a sudden, you find the whole tenor of things change. The bad news? We've got at least 16 months after January of 17 before we can even think of getting the right policies put in place. And there's no guarantee we'll do it right because the gap has gotten bigger and bigger and bigger. The rhetoric is pitting one sector of the economy against the other, producers against lesser producing people that feel that these people are wealthy because they took something they didn't deserve. That's the rhetoric. I can't do anything about it. You can't, but you've got to understand it. Now, what's likely? And it's all probabilities. What's likely is, no matter who's elected, we will have a long debate with both parties focusing on the wrong things. And again, this is an apolitical discussion. I'm not telling you anything you don't know. The Republicans are focused on that debt and the deficit. They want to cut the growth of government spending when we should be increasing it. And if they lower taxes on one group, they want to raise it here so that they don't worsen the deficit. It's insane. They limit any effect tax cuts would have on the system. The Democrats seem to, from the rhetoric, want more social fairness. Listen to it. I don't care who it is, Sanders, Clinton. I don't care who ultimately becomes the nominee. It doesn't matter. Somebody we don't even know yet. It doesn't matter. That's what's driving this thing because people in a democracy vote. And the thing to understand is democracy and capitalism, a free market system, are not compatible. Because in a democracy, we all count the same. One person, one vote. I don't care if you're Donald Trump, you're me, one person, one vote. We're differentially productive, however. But the votes from the populace may dictate that we increase government spending. Democrats want to increase it, that's good. But to pay for it, they want to tax the most productive elements of the system. It's insane. The odds that we're going to get the right mix of policy in the next 2 years are low. We've got the next year or so before the election. Nothing is going to happen. Nothing. You know that, I know that. I'm not telling you something you don't know. But after that, with a new government, they'll debate and this and that. If you got the right thing, it wouldn't be till May of 17. In the meantime, our economy is growing very, very sluggishly. A 1% growth rate in the fourth quarter of this year, maybe you bounce to 2.5%. These are anemic rates of growth. You know what it's like to why it's so frustrating for an economist? It's like having the greatest rocket ever developed, filled with fuel, and your objective is to put it in orbit, and you put it in orbit, and it goes round and around and around, but ultimately, normal friction is going to slow it down. And if you don't take an action, it's going to plummet to earth and burn up. What would you do? Well, you got all this fuel, you give it a boost of fuel, you kick it into a higher orbit, and you keep going around. Or if you want to escape velocity, really juice it, and off you go. We've got the rocket, we've got the fuel, but we won't use it. That's the frustration. Now, how do you operate in an environment like this? It's going to be incredibly uncertain. I wish I could tell you otherwise. The markets are going to be extremely volatile. One day euphoria, the next day down. Look at today. I mean, They decided to cut interest rates again in Europe. The market goes up, then they think about it and say, that ain't going to do any good, it goes down. So you're living in a world like this where it's very hard to plan, and what happens is time horizons tend to shrink. People that were about to buy a home say, maybe we should just wait a couple of months, dear, until I'm sure about my job. That's what happens in a period like this. As quickly as it can be, you could be excited about something, you get pessimistic about something. And so one day you'll feel good, the next day you'll feel bad. The Fed can do whatever it does, it doesn't matter anymore. Watch what they do, do not watch what they say. If for whatever reason you see them discussing seriously taking the right measures, lower taxes, don't raise them on anybody. You want to, and you do, you want to lower them on the lower end of the income scale, because guess what? We learned this in the 30s. People at the lower end spend every nickel you let them keep. You cut my taxes, I don't necessarily spend it. I save more. I might invest it. But you want spending. So it's different than the 80s. You don't give it to the wealthiest, who when you want saving and investment you do, but you don't now. You give that tax cut to the lower end. Borrow if you have to. Don't take it from the wealthy group. And increase government spending. And yes, be prepared to see those deficits rise. Why won't we do it? Because the last time we were giving the opportunity, we blew it. $800 billion of stimulus was voted. Half of it was wasted. And in an $18, $17 trillion economy back then, that's a drop in the bucket. That's the frustration. The solution is known. The odds are our government, for political reasons, Republican and Democrat, will not do what's appropriate until things get bad enough. What does that mean? That's a nightmare. That's when our government acted in the 30s. It's when they acted in the late 70s and early 80s. And I'm afraid it's when they'll act again. As an investor, I will tell you this. Please do not take any more risk than you need to take in this kind of environment. We got to take risk. If you need 4% on your money to live for the rest of your life comfortably, fine. Do not take 6 and 8% risks. If you need 4% to live comfortably, do not take a 2% risk. You'll never get there. Be very, very careful. Ultimately, we will do the right thing, but unfortunately, by the time we get there, there could be all kinds of other things to worry about. Now, this isn't the kind of talk that goes over necessarily very well. It is much more fun for a speaker, believe me. And I remember these days, and one of the fellows here was there when things are good and you can legitimately tell people they're good, you get standing ovations. They don't care if you're right or wrong, but at least from my perspective, it's the right thing to say. You don't want me to come here and because it's a nice meal and friends tell you things that I don't believe. That's not my value. When I was on the investment committee, they didn't want me to pick stocks or bonds. They didn't want me to make them feel good. Just tell us where we're likely to go based on our assumptions, and then get the hell out of the room. And that's exactly what I did. And that's what I'm doing today. If you were going into battle, you don't want the lieutenant to sing you a song about there's no enemy out there. Don't worry, it's going to be a real cakewalk. We'll just walk on the beach and get into town and have some Bloody Marys with the local people. You don't want anybody to tell you that. Make you feel good. It'll get you killed. I hope I am wrong. If I am wrong, given the way I think, I'll know ahead of time that I'm on the wrong track. I'll only be too glad to come back and tell you even beforehand. I'll tell Albert to tell you before next year. Man, was I wrong, but nobody's going to care because if I'm wrong, things will be so good you won't believe it. I don't want to be right. But I know what to look for, and I want you to know what to look for. And listen for in the rhetoric. And read. It's simple. Economics is simple. It is really, really simple. When you get down to it, we just put fancy words to this stuff. Makes us sound smart. So I want to close by, again, it's a warning. I'm ringing a little bell. You're about to enter a period now that is very rare in our economic history. Very few people are alive that remember what that must have been like. And so it's new to us. We've never seen it. And it is not political to get on TV if you're the head of the Fed and say to Congress, can't do anything anymore. We're out of bullets. They'll never tell you that. Just understand the problem. Now, there's that debate tonight. I will take questions until you guys just get up and go. Please, question. Yes, sir.
Wait. Before we start, I just want to say, the rules are, if you're called on, you get up, you identify yourself, you enunciate, Carl Nolan, and then you can ask your question.
And I will repeat the question. Yes, sir.
Carl Nolan, has austerity programs ever worked in any kind of economic climate?
Good question. Have austerity programs ever worked in any kind of economic climate? In the short run, if the economy is overheating, what you find is you're running a surplus, like you did in the 90s, that everybody brags about. When you're running a surplus, it means you're taking more, the government is taking more out of the system than it's putting in. You got to give it back. If the economy is overheating, short-term austerity is what's called for. Reduce demand, raise taxes, slow down the system, get it to grow, and then pump it up. Over the long run, you don't want deficits or surpluses. Each one is an imbalance. So yes, there are times when austerity, properly applied, works. Every Econ 101 student knows it. It's just inappropriate now. Can you imagine? I said, what would have happened had Roosevelt come in saying, hey, we got to raise taxes and cut spending? There wouldn't be an America today. Just wouldn't be. Yes, sir.
Silvio Solari, which presidential candidate, in your opinion, would be best for the economy?
Well, that's an interesting question. None of them. None of them. And I'll tell you why. On the Republican side, they're focused on the debt and the deficit. On the Democratic side, it's not a net reduction in taxes. They're taking here and cutting here, and the stimulus that we would get would be muted. It wouldn't be enough. They're just focused on the wrong stuff. And I'll leave you with this, or I'll give you this thought. I don't think that either one of the candidates you may think are going to run for totally different reasons. Which is why the debate tonight might be kind of fun to watch. Doesn't mean a damn thing. Yes, sir.
Ken Nilsson, you indicated that the big issue right now, at least in public, is income inequality. You also said that if poor people get more money, they're going to spend it. So, one side of the fence will say, let's raise taxes on the rich, give it to the poor in some kind of a transfer payment, they'll spend it. Won't that stimulate the economy?
Yeah, that's a very interesting question, and you're right.
You may want to just repeat.
In the short run, the question is, look, if you tax the rich, who really don't need this money to spend, and you give it to the lower income people who will spend it, doesn't that give you the stimulus you're looking for? In the short run, it does. But if I give someone $8, $15 an hour who produces $10 an hour, in the longer run, that just bids up the prices of the stuff they buy, and then they're back to where they were. Look, in the 70s, I went and testified before Congress. It was a matter of, do we raise the minimum wage federally to $5 an hour? And you sit down there, and if you've ever done it, it's very intimidating. All these Congress people looking at you. And they were fighting back and forth, oh, we shouldn't do this, we shouldn't do that. And what the government was saying, well, we can't afford to do $5 an hour. And I said, look, what are we wasting our time? You want to make people really better off? Let's give them $10 an hour. And what it was some groups were saying we should raise the minimum wage $5 an hour. He said, let's raise it to $10 an hour. And one of the congressmen said, Dr. Goodman, we can't afford $10 an hour. And I said, sir, with all due respect, you can't afford $5 an hour. So what happens is, and think about it, 1956, the minimum wage was $1. What a hoax. We've raised it to where it's now $8, and these people are still not getting their productivity, what they produce. What you're telling somebody is not that they have to earn $15 an hour. If you're an employer, what I'm telling you, as the government, you can't hire that fellow for $8 an hour because we won't let you. It'll be illegal. And that guy might say to you, look, I need to work. I will work for $8 an hour. You have to tell him I can't do it. The government won't let me. You distort the markets. And in the end, boy, these markets, when they react, they can react very violently. In the short run, you're right. Will it be sustaining? I'm afraid not. Yes, ma'am.
Oh, I'm sorry.
Yeah.
Hillary Shepard. I just wanted to ask Dr. Goodman, don't you think that if the Obama administration had not kept Geithner, who I quite frankly think is like you a genius, that we would all be in soup lines right now? And I always thought
And that was Geithner?
keeping Geithner really saved things. He's gone now, which worries me, but I think he was a Bush appointee. You know, we had a good balance there, and I think the people I've talked to who are in your field say that we would be in soup lines if Geithner had not been head of the Treasury.
You know, the question is, if Geithner hadn't been there, we would be in soup lines today. Let me tell you something. Back in 2008, we were very, very fortunate. Not just Geithner, but we had a fellow whose specialty, he was at the Fed, the head of the Fed, Bernanke. It's Bernanke you're talking about, correct?
Yeah.
Not Geithner, Bernanke. Bernanke's specialty was the Depression. And what they did back then, yeah, they bailed out banks. They bailed out the auto industry. You know why? The banks were too big to fail. You let Citibank and Bank of America go under for ideological reasons, 20 million people would have been affected. Let the auto industry go out of business, they're telling you now 4 million people would have been out of business. They're too big to fail. You can't do it because they're people. When the people at Citibank go home, what do you got? Where's Citibank? It's a building. It's nothing. It's people. So yeah, there'll always be something in this economy too big to fail, and if we change it, we won't be worth anything. So I will tell you that in 2008, the Fed did exactly what it had to do. They understood the problem, and they did it, but now they're out of bullets. Now they got to rely on the Congress and the President to do their share on the fiscal side, and they won't. And they will never speak up. Did you ever see Ellen? When they actually asked her at the last testimony, you mean the problem is on our side? And she wouldn't say yes. And the reason is the Fed is a creature of the Congress. Wasn't too long ago, you had a couple of Fed presidential candidates saying, abolish the Fed. They don't want to intimidate the Congress. So they never give the Congress advice. They never say we need tax cuts. They never say we need more spending and not to worry about it because if we have to, we'll print the damn money. They'll never say it. So yes, we were very fortunate then. We're not so fortunate now. And it's really a worry. Any other questions? Yes?
Isn't the Chinese owning $1.5 trillion of our maybe $9 trillion debt? That's a scary thing for many. Bob Bartlett, sort of a pretty scary thing that a lot of people have waved flags about. We're in danger. So our economy is in a real fear of what the Chinese might do to control us with that $1.5 trillion debt that they own. What's your feeling on the danger of China owning $1.5 trillion out of our $9 trillion debt? I mean, you know the number.
Thank you very much. What's the danger with China owning? It's about $1 trillion now. It's about $1 trillion of our debt. If they were to use that, either as a weapon or for any other reason, what would it mean? It's interesting. Why do they keep buying our treasuries? They don't have a choice. They don't buy the euro. They don't buy the yen. When they get scared, our enemies buy. That's my point. Now, they've spent about $400 billion already. And our interest rates have gone down in the face of that. The system is imploding worldwide. Now, oddly enough, and I'm really glad you brought up China, you look for indicators, early warning signals. I do. You should. I think we're going to get the best signal we will ever get from China. China is trying desperately to spark its economy. They had been growing at 11.5% a year. They got 1.3 trillion people. 1 billion, rather, 0.3 people. That's a lot of folks. It's a lot of people. And their economy is now growing at 6.5. They want to stimulate it. They've used up the chit. They can't devalue their currency much more. Nobody's going to let them get away with it. There'll be competitive devaluation at some point. That doesn't work for them. Their monetary authorities can't do it. So what might they do? They might sell some of those treasuries to a very willing world to buy them. And what do you think they're going to do with it? Now remember, there's no democracy in China. There's capitalism, no democracy, it's a dictatorship. They can make, like that, a good or bad economic decision. No debate, no Congress, no TV shows, nothing. If they decide that the only thing to get their economy growing to avoid social unrest is to sell some of those and then build bridges, I don't care where they go, and tunnels and trains, or what, put their people to work, they can do it like that. And let me tell you, the world will be watching that experiment. And if, as I would suspect, it begins to have an effect, and all of a sudden their economic numbers begin to look somewhat better, their industrial production, if you trust the numbers, if it begins to look better, that won't be lost on Europe, on those countries that are sinking under their own weight, and it certainly won't be lost on us. It gives us the cover to use fiscal stimulus. And guess what? I don't care if I saw that happening. I don't care where the equity markets are at the time. And they might not necessarily be as high as they are now. That's when I would start to commit funds. That's when I would begin to feel the way I felt in 1980-81, when I could see what was building in government, the kind of things they were experimenting with. In 1980, I went down to the Treasury Department, and nothing down there is crypto secret, believe me, and talked to the young economists my own age, and I asked them, what are you working on? And they were working on the effects of cutting the capital gains tax, the effects of cutting the dividend tax, the effect of lowering corporate rates and income tax rates. And I went back and said, what the hell are they doing that for? Somebody had to tell them to do it. That's when we got excited. It took a while, but boy, when everybody finds out about it, it's too late. And that's what I'm urging you to do. Look for these signals, and strangely enough, the early warning could be from China. Just watch it. Now look, I've kept you too long. By the time you get back, nothing will have happened. Believe me, nothing will happen. But I want to thank you all very, very much for being so polite. If something does change that changes my point of view, positive or negative, I will call Albert. He can make it available to anybody that gives a damn. But again, I want to thank you very much. God bless. Thank you.
Thank you, Bob. Thanks for coming out tonight. Have a good evening and a safe trip home. Thank you very much.